Are you guys surprised at this point? I'm not. Another red day for SoFi stock and the overall stock market, which, oh man, we're going to break down the indexes later in the video. The VIX is up 8%. All the indexes are down well over 1%, and SoFi's down over 2%. We have to break down the charts, my thoughts, the whole 9 yards. You guys know the drill, but first, hit the like button. Do not forget to subscribe here on YouTube on the main channel and my second channel, Stas Talks Money or Stas Surfest, my name. I'm doing a giveaway at 1,000 subscribers. Make sure to subscribe to that channel. It's linked down below. And with that being said, guys, cheers. Take a sip of your coffee. You're going to need it for this video, and let's dive into it. So, like I said, we're down across the board, and are you surprised? I'm not surprised here at all, guys, considering the nature of the current market that we're in. The volatility's up with the tariffs, uncertainty with what's going on now leading into April 2nd, after April 2nd, right? So we're down again across the board, and SoFi actually broke under $12 today. We're currently still under $12 per share. We hit a low of $11.73 about 30 minutes ago, and that's after this morning we tried breaking out. We got to 12.25, but clearly we got rejected. You guys can see here, we tried taking out this key level from yesterday, and this is classic in a downtrend, right? This is how it usually goes. We tried breaking out of yesterday's support being about 12.20, 12.25, but we didn't, right? We hit 12.20, 12.25 this morning, got rejected, dumped to 11.73. Like I said, that was the low of the day, which took us under the lows from yesterday. So pretty much every day this week, guys, we took out the lows from the previous trading day, hence the downtrend, right? We're clearly downtrending on SoFi right now in the short term, and this is exactly why I sold the covered calls on the breakout, because I just didn't see a scenario in this market with these conditions where SoFi was going to just break out fully, at least right now in the short term, right? Eventually, yes, we're going to break out, in my humble opinion, but I just didn't see it in the landscape we're in. I truly believed that this was a bull trap, a little relief rally, and that's why I took advantage of the higher premiums, and I sold covered calls when the stock was at $13.50 to $14. I sold the crap. Do I remember now? What were they? The $15, I'm pretty sure, April 17th covered calls. I sold those, and now we're down to $11.90, guys. That trade is looking really good, and I like doing this on stocks that I own. You guys know that. Sell calls, especially in sideways markets or even, downtrending markets where we get a bit of a relief rally, right? I like selling covered calls. I don't like doing it. Let's say, for example, if SoFi was... If we were in this time period right here where we were clearly breaking out, super bullish, I wouldn't sell covered calls in this during this time period, because we're going to see our upside capped, right? A lot of the time, that's how, you can get screwed, quote unquote, on selling covered calls. It's not really you getting screwed, but you miss out on the upside because you have to give up your shares. Let's say if I sold the $10 calls here back in October, whatever, and the stock ran to $12, $13, I would have to give up those shares at $10, even though the stock was at $12, $13. So I'm not the biggest fan of selling calls on a stock that I'm super bullish on long term, especially when we're running in the short term. But I'm cool with doing it if we're trading sideways or slightly downtrending within or seeing a relief rally within a downtrend. And that's what I did. You guys can see here, we're clearly still in this downtrending channel. I sold the calls when we got pretty much to right here. You guys can see we hit that 180 SMA, got rejected. That's where I sold the covered calls. And now we're under the 50 SMA. right? Clearly, the stock is pretty much in free fall at this point, similar to what we saw a couple of weeks ago. And who knows, maybe SoFi gets down to $8, $9 again, man. You know, the lows from the middle of this month, about 2-3 weeks ago, were about $10.35. And we're still at $12. I mean, let's not get too carried away here, but if we take out that $10.35 low, yeah, we're probably going back to $8, $9. That would put us right here at the bottom of the channel. And guess what? I would be loading the boat at that price because, again, I'm long-term on SoFi. A lot of people are probably panicking now in the short term, but if you believe in the stock long term, now is the time to buy. That's how it works, right? Go figure. You buy when stocks are down. Yes, contrary to popular belief, you know. It's like, it's funny, you know, now with the markets down, people are freaking out. They're scared to buy. It's like, think about it when you go to a clothing store or whatever, right? Let's say, for example, you shop at the mall and your favorite store, they have a 70% discount, 50% discount. What are you going to do? Are you going to go to that store and panic and be like, oh no, I'm going to wait till the clothes are back to full price? No, you're not going to do that. You're going to go to that store and you're going to buy clothes at half off, right? You're going to buy them on sale. I don't understand. I've been in the market for 10 years now. It always baffles me. I don't understand why that same mentality is not applied in the stock market. It doesn't make sense. I'm not just talking about SoFi here. I'm talking about in general, with stocks in general. You know, let's pull up some big tech names, you know, Google. People look at Google now, they're probably like, oh my God, it's collapsing. I'm not going to buy it. Oh my God. Amazon, it's down. Holy smokes, $50 a share. I'm not going to buy it. Well, this is the time to buy, right? Not these stocks, but just in general. When there's pain in the streets, blood in the streets, that is the time to buy. I never really understood why that same mentality doesn't apply to stocks. Well, I guess I kind of do understand it. It's the psychology behind it. I mean, it's people panic when they see their money going down. You know, they have a huge emotional attachment. People do to their portfolios, their money. When they see it's, you know, their money's going down, the value of their portfolio on paper is going down, they're like, oh my God, I got to sell. I don't have to buy, or I shouldn't buy. I got to sell to preserve my capital so it doesn't get worse. But in reality, that's the best time to buy. So if you make that mental shift, guys, which I know a lot of you guys already know about it, you already do that. But if you're newer out there, overall in the stock market, man, you got to make that mental shift. When stocks are down, treat it like, okay, I'm at a store and I'm buying my clothes on sale, you know? And I'm not saying just go all in when a stock's down 5% or something. But if your favorite stock, in this case, let's say SoFi, if SoFi is your favorite stock, it's down what? From the recent $18 high, it's down 35%. You know, you might want to start adding a bit more to it. If it's your favorite stock, if you believe in it long term, right? That's my mentality overall with all of my holdings. You know, just today I bought more NVIDIA. I bought more VTI, Vanguard Total Stock Market Index Fund ETF. I bought more XLE, which isn't necessarily down. That's an energy ETF, but I'm buying it because I like having exposure to energy stocks. I don't want my entire portfolio to be tech-oriented, right? I want some different companies in my portfolio, you know. And that's why Buffett's been doing very well. On a side tangent right now, if you've noticed, I think Berkshire Hathaway stock is not doing that bad. Let's pull it up here. BRKB. Crap. How do I find it here? Either way, whatever. Berkshire is actually not doing that bad because they're so diversified. Sure, they have Apple stock, which Apple is doing pretty well. It's holding up, kind of. Not really. It's down like $40 a share from highs, but that's not that bad compared to other stocks. It's down 15%. But you notice Buffett has a bunch of energy stocks, which let me just pop up this energy ETF I bought, which has a lot of the stocks that he owns, right? XLE is pretty much flat year to date. You know, it looks pretty good, which flat is good in this market that we're in right now. Buffett also owns a lot of Coca-Cola. Look at this stock chart. It's actually up a lot in the last couple of weeks. Contrary to the market, it's up a lot, right? He owns other companies like AXP, American Express. That one's down, but some of the other banks are doing all right. You know, JP Morgan, I think, is holding up decently. Yeah, not too bad. So you have to have diversification, right? And the moral of the video is, right, when stocks are down, it's the time to buy. You know, I'm not telling you what stocks to buy, just in general. So what do you guys think about that? Let me know your thoughts in the comments. Run the likes up. Don't forget to subscribe on this channel and my second channel. We're doing a giveaway at 1,000 subs, and the content's great, completely different from this channel. We do personal reaction, finance reaction videos there. That is linked down below. Go check it out and get your 30 stocks from Moomoo. Deposit at least $100. You get 5 stocks. Deposit at least $2,000, you get 25 more stocks, and your uninvested cash now will earn up to 8.1% APY. Guys, it's a no-brainer, and you have less than 3 days to get on that deal. Use the link down below or go to stocksurfest.com/Moomoo. And with that being said, cheers. I'll catch you guys in the next video.